Everyone, let's jump right into this explainer. Today, we're tracing an undeniable, absolutely massive chain reaction that connects a distant, raging war straight to the physical cash in your wallet. We hear about geopolitics all the time as this far-off, abstract concept, but right now, we're getting a masterclass in global interconnectedness. We are going to look at exactly how the blockade of the Strait of Hormuz has essentially pushed the Indian rupee to a historic, record-shattering low, all thanks to spiking global energy costs.
Here's our roadmap for today. We're covering 5 key areas: the Hormuz blockade, the global energy supply shock, the oil-rupee spiral, the domestic economic fallout, and finally, desperate interventions. Let's get into it.
So think about this for a second. How on earth does a single drone strike 2,000 miles away manage to crash a national currency? How does a conflict in the Middle East actually dictate the price of your groceries in Mumbai or college tuition for a kid in Delhi? It's a fascinating and honestly kind of terrifying mechanism of our modern economy.
All right, Phase 1, the Hormuz blockade, a geopolitical choke point.
Let's look at how fast this escalated. In February 2026, the US-Iran-Israel conflict officially breaks out. Fast forward just 1 month to March, and a severe maritime stalemate takes hold, effectively blockading the Strait of Hormuz. Then, things get really real in May. A drone strike hits the UAE's $20 billion Barga nuclear power plant. Now, the radiological level stayed safe, but attacking the Arabian Peninsula's only nuclear plant, that sent absolute shockwaves through global markets. It proved, without a doubt, that critical energy infrastructure was now actively in the crosshairs.
Moving on to Step 2, the global energy supply shock, or basically, the staggering cost of a closed strait.
11 million. That is the daily barrel shortfall the world is dealing with right now. Normally, the Strait of Hormuz handles roughly 20% of the world's oil transit. That's around 20 million barrels every single day. With this vital artery blocked off, the International Energy Agency is tracking the largest global energy supply shock we've seen since the 1970s. 11 million barrels of oil just gone from the daily supply.
And look, you literally cannot yank 11 million barrels of oil off the global market without prices going absolutely ballistic. Before all this, Brent crude was chilling at an average of about $65 a barrel. After the blockade and that Baraka plant strike, the price shot straight past the $106 mark, and it's just been hovering in that 106 to 110 range ever since. This one metric, the price of crude, is the live wire transmitting the shock of this war straight into the heart of the Indian economy.
Which brings us to Part 3, the Oil-Rupee Spiral, also known as the currency crush. Here is the kicker. India imports a whopping 90% of its crude oil requirements, 90%. But here's the real problem. Every single drop of that imported oil has to be paid for in US dollars. So when oil was $65 a barrel, that took a certain amount of dollars. At over $106 a barrel, the country suddenly needs billions more dollars just to keep the lights on and the trucks moving.
This kicks off what economists call the oil-rupee spiral. Because India needs so many more US dollars to pay these crazy energy bills, it creates an insatiable demand for dollars in the foreign exchange market. And what happens when the demand for the dollar skyrockets? The relative value of the rupee totally collapses. These high oil prices are systematically draining the system and just crushing the rupee's purchasing power.
Actually, human psychology makes this even worse, through something called importer hedging. Imagine you run a business that relies on imported goods, right? You see the rupee falling fast. You start panicking, so you preemptively buy up whatever US dollars you can get your hands on today because you're terrified they're going to be way more expensive tomorrow. When thousands of businesses do this all at once, it creates this artificial, massive spike in dollar demand, which just accelerates the currency crash even faster. It's a total self-fulfilling prophecy.
And the devastating result of this whole spiral, the Indian rupee has plummeted to a historic, mind-blowing low of around 96 to the US dollar as of May 2026. Guys, this isn't just a minor dip. That's a drop of over 5% since the conflict started, officially making the rupee Asia's worst-performing major currency this year.
Okay, Part 4, the domestic economic fallout. Let's take this from the macro level straight down to the micro.
Looking at the hard numbers, the damage is stark. Foreign exchange reserves, basically the country's economic shield, have bled out from $720 billion down to $697 billion. Wholesale inflation, driven directly by these crazy energy costs, has skyrocketed from a super manageable 0.85% last year to a 42-month high of 8.3%. And foreign investors, they're panicked. They've dumped more than $20 billion in Indian stocks, which is the fastest pace of foreign portfolio investment outflow on record.
But remember, behind these massive numbers are actual livelihoods. Take the cashew processing industry down in Kerala, which heavily relies on raw nuts imported from Africa. Because the rupee has lost so much value, buying those raw materials now costs an absolute fortune. As importer Rajmohan Pillai points out, imports have become so wildly expensive that an estimated 80% of processing units have simply shut their doors. The currency crash is literally closing down factories.
And it's hitting personal dreams directly too. For students planning to study abroad, tuition is paid in foreign currency. A 17-year-old student, Meghna Sen, hit the nail on the head, calling it the last straw. Educational consultants are estimating that studying in the United States right now costs an Indian student over 1 million rupees more than it did just a year ago, purely because of the exchange rate. A war happening abroad is literally pricing students out of their education.
Finally, Section 5. Desperate interventions. How are they trying to stop the bleeding?
Well, the Reserve Bank of India is running a rapid defense playbook right now. Step 1. They are actively burning through billions of their hard-earned foreign exchange reserves, flooding the open market with dollars just to artificially prop up the rupee's value. Step 2. They've totally clamped down on speculative trading to stop traders from betting against the currency. And Step 3. They are providing special direct credit lines to oil importers to try and ease that sudden, massive demand for dollars.
But the situation is so severe that it's moved way past central bank mechanics. The Prime Minister has publicly urged citizens to adopt voluntary austerity measures. The request is drastic. Stop buying gold, which, by the way, is a massive dollar drain for India, and completely halt all foreign travel for an entire year. The goal here is to build a citizen-led forex shield to keep those precious dollars inside the country.
And you know, this just brilliantly illustrates the reality of our 21st century globalized economy. On one side, you've got a geopolitical trigger, naval blockades and drone strikes at the Strait of Hormuz. On the other side, the immediate domestic reality, a record low 96 rupee to the dollar, and an 8.3% inflation rate eating away at people's savings. A maritime blockade halfway across the globe is literally dictating the price of your milk, your fuel, and your tuition.
It's wild.
Which leaves us with his final provocative question. If a diplomatic resolution isn't reached soon, and the Middle East's vital shipping lanes stay closed, exactly how long can the Reserve Bank burn through its reserves to defend the rupee? I mean, the forex shield is big, for sure, but it is definitely not infinite. At what point do these fundamental economic forces completely overwhelm those emergency interventions?
And that is the billion-dollar question moving forward. If you found this explainer on the Hormuz blockade and its crazy impact on the rupee helpful, please make sure to hit that like button and share it with anyone who really wants to understand the mechanics of our global economy. Don't forget to subscribe to the channel for more deep dives into the topics that actually matter. And hey, jump into the comments below. I want to know, how long do you think the rupee's current forex shield can actually hold up? Thanks so much for watching, and keep learning.